So we are live. We're live. Thank you so much and good evening from the AG Career Hub community. Very, very excited to have two experts who are in the area of financial products, and they say they're going to take us through the life insurance in Germany. It's an important product. For the ones who have lived in this country, you know how insurances play a big role. And I'm very happy to have Charity and James, who said they're willing to take us through the process. And this is how we build a community. We always say this is not a community for one person, but a community for all of us. And very happy to have both of you. Maybe you can briefly introduce yourselves. And then after introducing yourselves, then you can take us through the program. So at least we know the requirements, if it is really worth, why do I need these insurances? We come from an environment where we are always very skeptical about insurances, and then you come into a country which is where insurances are very, very important. So very happy to host you and the AG Career Hub community, and karibuni sana Charity. Maybe we start with Charity and then we go to James, and then you can take us through the program, and then at the end we will have the Q&A session. I hope that's fine so far. Karibuni sana.
Hi everyone, thank you so much, Carol, for having us today. So my name is Charity Kawera, and so a little bit about myself is that I am a master's degree student in mathematics. I'm doing my master's at Leibniz University. I'm almost done, so it's just my master thesis that's remaining. So I'm currently living in Munich, although I study in Hanover. I mean, you can write your master thesis from anywhere. So yeah, and then before, I'm 2 years old in Germany. Actually, 2 years ago, a day like today is when I received my visa for coming to Germany. So I'm 2 years old in Germany, and what else? Before I came to Germany, I worked for a life insurance company. If you've heard about ICA Lion Group, so I worked there for 7 years. So I would say I'm quite familiar with the life insurance and everything about it. And my bachelor's degree was in actuarial science at Dedan Kimathi University. Besides that, my full-time job is being a mom. I'm a mom to a 6-year-old and a wife as well.
Thank you so much, Charity. I actually forgot to introduce you with this because we are also very honored to have them as part of the networking, or part of the networking and mentorship community. So if you go to our website, if you go to what we offer and click on mentorship program, you'll be able to see like the landing page, and if you click down here, you'll be able to see different profiles. If you click on art and design, we have some Kenyans who are there, and if you click right there, then you'll be able to read more about what they do and where you can connect them, where you can reach them out. So, and our guests today, they are also on the platform. So if you click on science and mathematics, you'll be able to see the two. We are in the process of uploading more profiles, and if you click here, then we're able to read more about what they do. And you can also connect with them via LinkedIn. So it's actually a small community. We are planning to have as many profiles as possible, people also with businesses. So at least we can build this and scale this on the next level. And over to you, James. This is James' profile, but karibu sana, feel free to introduce yourself. Sorry for interrupting. I just forgot to talk about this. Sorry, one more thing. If you click on add entry, you can actually go ahead and put in your own details and like state the areas of expertise. And important down here is to say the areas you would like to support. And if you have an organization or company, you can also list it here and some links here. And also for us, it's very important to have the privacy policy. And you can also say you would like us to publish your profile, or you'd like your profile not to be published, or we can contact you in case we have people who need your expertise. So feel free to use it. I'll also drop the link in the chat. Let's build this for the generations to come. I was telling someone, every time we have a new profile, we always show it to our daughters. At least they grow up knowing they have role models in the society. So, James.
Okay, well, thank you very much, Carol. And I think it's a very good idea to have such a platform so that people can share their own views and also their professions. And I mean, I will say all the time, information is power, and without information, we will live in the dark side of this world. So my name is James Dennis Kipkosgei. I am a master graduate in mathematics, business mathematics, that is. I did my master degree in Technical University of Mittelhessen, that is between Frankfurt and Kassel. For those people who don't know, it's in Hessen. Currently, I am full-time employee and working as a business consultant in an insurance department, that is like as an actuary. We offer services to the insurance companies as well as we audit them. Yes, that's about my bio. Thank you very much all for joining this session, and I hope at the end of this presentation you will have gained some knowledge. And it is very important to take a life insurance. It's not a must in Germany, but I think it's one of those products, one of those life insurance, one of those insurance that it is important. If you have the loved ones, if you have the family, you have the friends, I think it is most important to take life insurance. So I think I will share my screen now, and we will take you through our presentation. If I can do that. Share. Can you all see my screen?
Yes, we can see it.
Okay. Okay, this presentation is about life insurance in Germany. There are a lot of products of life insurance in Germany. As I said, also, there are a lot of insurance in Germany, but one of them is the life insurance, and there are a lot of products in the life insurance, and we are going to take you through these products of life insurance and what is life insurance and who is supposed to take one. And we are going to, our agenda will be the definition of life insurance in Germany, types of life insurance in Germany, advantages of life insurance policy, factors affecting premium, life insurance companies offering insurance policies, and then at the end, we will conclude by telling or advising you on what we know or which product of life insurance is suitable for each and every one of you. So I think for the definition part, kindly Charity, take us through that.
Okay, so the first thing is what's a life insurance? So I know most people are used to motor insurance, mostly because we all come from Kenya and we know like the mandatory insurances. So for example, health in here in Germany, or motor, I don't know what else is mandatory, but since life insurance is normally not mandatory, so some people probably don't know about it. So it's a contract between a policyholder who can be me or you, and an insurer. An insurer is an insurance company. There are so many in Germany, and we're also going to have a look at them, just so that you can know like which are the life insurance companies in Germany. So it's a contract between you and the insurer, where now the insurer promises you that they are going to pay you as an amount in case of death or sometimes survival, a mixture of both death or survival. But the most common one in Germany is the one that you're paid in case you die. So, so your beneficiaries are normally paid what we call a sum assured, sum insured. So upon your death. So when you're taking a life insurance company, it's normally very good to write your beneficiaries. So your beneficiaries could be your children or your spouse or your auntie, or I don't know, but I would want to, okay, since I worked in a life insurance company in Kenya, I used to see that some people would, because when you're taking a life insurance, you're given a form that you fill your details, then you fill your beneficiaries. So some people would have children and they have written they have a wife or they have a husband, but then still they would continue to write that the beneficiary is, I don't know, a certain auntie or a certain uncle, and you would wonder, okay, I mean, I thought the beneficiary, the best person to write your beneficiary would be either your spouse or your kids. So yeah, that's one of the things that I had planned to talk about, the beneficiaries. Yeah, they could be your dependents or family members or friends or business partners, but honestly, I would advise you to write your beneficiary as it's called what, the closed family, you know. Yeah. James, you can go to the next slide. Okay, so we go to who should take a life insurance. So the first person is parents with young children. I mean, when you pass on and you have a 5-year-old or you have a 10-month-old child or you have a 1-year-old child, what's going to happen to them? Like, what's their financial security after you die? So it's always nice to take, and mostly people advise you to take, when you're taking a life insurance, just look at what's the age of your child and at what age do you think they are going to become financially independent? So for example, if I have a 6-year-old, I am predicting that by the time he's probably 25, he's going to be financially independent. So I can take a life insurance cover of maybe 15 years or 20 years. So that's what you're normally advised to look at, the time, the age of your children, and the period, like when do you think they are going to be financially independent? If you think they are going to be financially independent at 30 years, then it's like you subtract that age and then you'll see like what's the term of your insurance. And then parents with older children, I mean, if they are 18, they can work unless if you want to, but as you grow older, you know, the life insurance cover becomes expensive. So they could also take their life insurance. And then the second one is the main earners with dependents. So if, for example, you're here in Germany, you send your money to your parents. There's a brother that you pay school fees for. There's someone you support at home. It means that that's like some sort of, you have like some sort of a dependent. So it's always advisable to take a life insurance cover, because in the event you die, what is going to happen to your parents? What is going to happen to your brother or your sister or whoever you're supporting back home? The next one is business owners. This one is mostly if you pass on for the continuity purposes of your business. You see, when you pass on and you have a business, so just so that the business can continue, it's always nice to have an insurance cover, life insurance cover, because when you die, the money is going to go back like to the business, and you know, the business can continue. Like whoever is going to take up the business can be able to, you know, like continue with the business without having like hiccups, ups and downs. And the last one is older adults without savings. This is mostly, for example, for maybe if you don't have any dependent, if you don't have anyone you're supporting at home, if you don't have any child, you're not a business person, it's always nice to take a funeral insurance, because it's also a type of insurance cover. So what happens here is, in case you pass on, this funeral insurance is going to help in payment, like to facilitate your burial. For example, now we're in Germany and you pass on when you're here. Of course, the cost of transporting, you know, like your body from here to Kenya and doing all the burial arrangements, it's costly. So if you had a funeral insurance cover, and sometimes it goes up to a maximum of 20,000 euros or something like that. So it's always nice to have one so that it can facilitate your burial. I know this is a sensitive part to talk about because I mean, no one wants to die, but it is what it is. So yeah, it's nice to have a funeral insurance. And also another thing I would add that is that funeral insurance covers are normally very cheap. So just have one. And then the benefits of life insurance. So the first thing is to provide financial security to the beneficiaries. That is kind of obvious because when you die, like you are the main earner in your family. So at least it relieves of your family, like it gives them peace of mind that they have something, you know, like to pay kids' school fees. Okay, here in Germany, there's no school fees, but if your kid is in Kenya, like, you know, you can continue to pay for their school fees, pay for medical bills, etc., rent and stuff like that. Also, it helps to pay for medical stroke burial expenses, which is true. Like, for example, if you're in a hospital and you see how Kenyans, like, there are so many tumchangos when someone has is ailing, and even after the death, people what is changa in English? Gosh,
Contribution.
contribute. People contribute, like, yeah, harambes, a lot of them. So I mean, to avoid that, this is one of the benefits of the life insurance, and then it helps back to pay back loans or debts. This is, we'll see one type of life insurance which is going to help, like, which is going to solve this, help you pay back the loans or debts. And then also we also see another one that is going to, you'll see how life insurance helps you to save for pension, like in old age. James?
Okay, thank you very much, Charity, for taking us through that. And now we're going to the types of life insurance policies in Germany. Basically, there are two major types of insurance. That will be term life insurance and endowment life insurance. There is also funeral life insurance that Charity has mentioned before. And it is not common here, but it is there. And I think it's also the way Charity mentioned and talk about it. It's also important to take one for those people who don't have dependents. And also if you are adult and you are, it's like you don't have someone who depends on you. And if in the case of death, if you pass on, and then the all process of the funeral, it's costly. We know funeral here in Germany, it's a minimum of 7,000, and also taking back, maybe you're from Kenya or outside Germany, that's more expensive. And that's why we really advise people to take this kind of funeral life insurance. In the term life insurance, there are three categories that will be individual contracts. There's linked, joint insurance, and cross insurance. Now we are going to the part of, we are going to talk about these types of life insurance in detail. Term life insurance. In the term life insurance, in Germany, it's a policy you get for a certain period of time. I have underlined the period of time. We will talk about that in a few. And it can be like 45 to 45 years, sometimes also 60 years, but we will come to that in a few. In the event of a policy holder death, during this period of time, the beneficiaries receive the insured amount of money. I've also highlighted the insured amount of money that we will come to that also in a few. And if in the case of survival, this insured amount of money will not be paid back, and also the premium will just go like that. That means it is only the sum insured will be only cashed out when you die, that when the policyholder dies within this period of time. This kind of insurance is not used to accumulate capital. There is one for that, that accumulate capital. This kind of insurance is only for, that's why it's called Risikolebensversicherung in Germany. It entails risk. It means the insurance company take your risk against the premium, and the risk is that in the case of death, maybe you've been paying premiums. Let's say I took a life insurance for a period of 30 years, and then I pay my first premium, second premium, then I die. The insurance company will have to pay to my beneficiary that insured amount of money. But if I will not die within these 30 years, then I will not get any money, or the beneficiaries won't get any money. So, as I said, the highlighted words, there is period of time of coverage. It is limited in this life insurance. Some depends on the insurance company. Some offers up to 60 years, but mostly commonly 45 years. Some offers maximum of 30 years, and also there is minimum, sometimes 10 years, 5 years, also depends on the insurance company. There is also the sum insured. The sum insured is the money that, in case of death of the policyholder, the beneficiary will get that insured amount. There is also a minimum and a maximum depending on the insurance company. The minimum is usually like 10,000, and mostly the maximum is 500,000, but some insurance companies offer up to 1 million. And deciding on which sum you should insure is a personal decision, is a personal issue, but most of the experts advise actually that you insure amount that is 3 times the yearly income. That will mean the brutto income. If I'm earning 50,000 per year, then you multiply that by 3 and you get 150,000. That should be the minimum. As you can as well insure 500,000, depending on the needs of your loved ones. The insured amount is paid only in the event of death within the insured period. So if we combine both the length and the insured amount, so it will be cashed out only in the event of death during this period. Otherwise, it will be gone like that. So to the next point, we've talked about sum insured. There are 2 varieties. There is one called constant sum insured and decreasing sum insured. In the constant sum insured, the insured amount remains the same the entire term. That means if I insure the sum of 50,000, 100,000 euros, in the event of my death, my beneficiary will get also 100,000. Okay, I gave here an example of 250,000. My beneficiary will get the amount of 250,000. But there is also a decreasing sum insured. How that it works, like in the insured, it decreases with time. Like at the end of when the life insurance expires, at the end, you won't get that you pre-selected before. The reason behind that, it is thought for repayment of the loan. So if, for instance, I take a life insurance for a duration of 30 years and I've been paying premium, as well as I'm paying back my loans or my mortgages, that means before I die, there is a point, the amount of the loans will have reduced, and as well as, so it doesn't make sense to have this constant if in my thought was actually to pay out the loan, not for the loved ones. And that's why this decreasing sum insured is there. And we will see later that these two also affect the premium. We will see that the decreasing sum insured, the premium of the decreasing sum insured is a little bit lower than the constant sum insured. So the types of term insurance, we have individual contracts. The individual contracts is like each person, everyone, we are like now, I think more than 20 or 30. So each one of you will take an insurance cover and you state a beneficiary and you state the time. And in the event of death, then the beneficiary will receive the amount of insured amount and the insured amount. And it is very flexible because you can change the beneficiary at each point at any time. For example, maybe if you are in a married situation, you have a family, and then who knows, nowadays is kind of a lot of challenges. You break up or you divorce, then you can change. If the beneficiary was your wife or your husband, you can change the beneficiary to your child. There is linked or joint insurance. This also for couples, this for married people. Sorry, yeah.
Maybe you can, sorry to interrupt you, maybe you can go to this slide about appointing your child as your beneficiary. So if, for example, your child is underage and you have appointed them as your beneficiary, so they are normal, they would be, and then you die, the amount would be paid to them if when they reach 18 years. It's also the same way how it works in Kenya. So, because I mean, when the child is underage, they cannot be able to handle the money. So, I would give an example in Kenya because I mean, I worked more there. So what happens, which I also think happens in Germany, but this I'm not so sure. So what happens is that instead of appointing your child as a beneficiary, you can write like the money to be put in a trust fund in case you die. So in a trust fund, this means that you and then you write your money is going to a trust fund, and then you break down how you want the payouts to be. So for example, you can say 30% will be paying every month, will be paying for my child's school fees until XXS, and then another 30% will be paid to the guardian, you know, for upkeep, etc. You know, you can write that. I think it also happens in Germany, but I am not so sure. I would definitely need to confirm that.
Thank you for that input. Also, the beneficiary should not be, it's not a must that you have a beneficiary as your family member. It is always, it can be a friend, it can be business partner. And yes, I think that's also very important to note. But it makes sense if it's one of your family member. Then there's linked or joint insurance. In this case, two people decides to take an insurance cover, but the contract is one, the sum insured is only one. For the case of the married couples, that makes sense for them because the premium will be low and you will be having one cover. And in case of the death of other partner, of one partner, the other partner receive the sum insured. So here you don't have to pre-select a beneficiary. It's automatic that the other partner will get. But if both die at the same time, that's where a problem comes. Then you have to pre-select a beneficiary in this scenario. It's often cheaper than individual contract, as I said, and yes, in the sense of separation, you cannot change. It's very complicated. It's not that easy to change to an individual contract. That's why it's advisable to know first, to have good terms with your partner and agreed on one thing, even if after separation, the life insurance must continue. And yeah, exactly. The surviving partner received the sum insured, but can take after the death, then he or she can take then the other individual life insurance. Then I thought at first it's a kind of a weird type of term life insurance, but after thinking about it, I think it makes sense also. It's called a cross insurance, whereby two people each own life insurance policies on the life of the other. What does that mean? It means like there are two people, person A and person B. Person A takes a life insurance that if person B dies, I will get my own sum insured, and vice versa. So it doesn't mean that when the person B dies, I will get from his insurance contract, but I will get from my own insurance contract. And normally it's for the unmarried couples, and it was introduced because of the taxes. For unmarried couples, the taxes in Germany for inheritance tax there is an allowance of 20,000, but for the married couples, the inheritance tax is the inheritance tax allowance is 500,000. So I think that's also a reason to get married. Okay, let's go. Let's proceed. To you, back to Charity.
Okay, so another type of life insurance is called endowment insurance. So what happens here is that this is a mixture of term life insurance, which we said that in term life, your beneficiaries are paid in case you die. So here it combines in case of death or your survival. So for example, you go to an insurance company and you tell them you want an endowment insurance for 20 years. So what does this mean? It means that in case you die within those 20 years, you're going to be paid. And in case you survive, you're still going to be paid. This endowment life insurance is the one that is, in Kenya, it has been, what is it called? Like imepewa majina. For example, you go to an insurance company and they'll tell you they have education policy. It's this like endowment life insurance. I don't know what other, there's other, it has been pimped to give you like to attract you, because when you hear, oh, I have an education policy for my child, it means that it's just this endowment life insurance. So in case you die or in case you survive, you're both paid. Now, what happens here is that it's a combination. Now, because you're going to survive, we assume you're going to survive, I mean, your money better be earning interest. So it's like a combination of a savings plan and the risk part. The risk part is in case you die now. But now in case you die, in case you die, the savings part is not paid. Your beneficiaries are normally paid the death benefit only. So that's why normally it's not even advisable to take this endowment life insurance, especially in Germany, because the interest rates in Germany have been very low for some time. So it means that even when you take an endowment life insurance, your money is not going to earn interest. So you'd rather take a term life insurance separately and then you invest your money somewhere else, because a term life is cheaper than this endowment life insurance. This is where I was saying it has two components: the amount of money beneficiaries will get in case of death, and also a separate savings plan. So in case you die, they do not get the savings part. But if you do not qualify to take a life insurance cover in Germany, because you might not qualify to take a life insurance cover in Germany, you could take one in Kenya, and this is the one that makes the most sense because at least it has the interest rates in Kenya are not as low as the ones in Germany. So why I'm saying that if you do not qualify to take a life insurance cover, so I'll give you an example. When I came to Germany in 2021, I have this endowment life insurance in Kenya, mostly because I used to work in a life insurance company. But so I have it. And then when I came to Germany, I also wanted to take advantage of, like, because it's cheaper when you take a life insurance cover in Germany. Like I feel like you pay less, okay, according to me. So I wanted to take advantage of that. Remember, I came as a student. I said I'm a student. So my visa was for 2 years. So I visited some agent for Alliance, but they told me, unfortunately, your visa is for 2 years, so you don't qualify to take a life insurance cover, unless if it was for a longer period, or if you're employed and your contract is unlimited, or if you have a permanent residence, that's when we would give you an insurance cover. So that's why I was saying, if you don't qualify to take a life insurance cover in Germany, then you can think about this one to take it in Kenya as a way to qualify to take a life insurance cover in Germany because it's better, it pays more, and yeah, that is the term life is better. So we go on, James. Yeah, I think I said about like mostly we are not advised to take an endowment life insurance in Germany because you will not get value for your money when you'd rather invest a part of it and also combine it. Now you take a term life insurance separately. So the next type of insurance is called funeral insurance. I think I had talked about it a little bit during the introduction part. So majorly, this one is what we call last expense in Kenya. So what does it do? It helps your beneficiaries, I would say, to cover for your funeral expenses. If you die here in Germany, we all know that the expenses for transporting your body back to Kenya, if you'll be buried in Kenya or something like that, if you had any, I don't think you'd have medical bills here in Germany. But yeah, to cater for all those expenses, it's always good to take a funeral insurance cover. And it's very cheap, I would say. So even if you're a student and you feel like you don't have money, students, you normally don't have money anytime. So if you're a student like me and you don't have money, yeah, this would be an option. And especially if you don't have anyone depending on you. So it would be nice to have a funeral insurance cover. So for some companies, the maximum sum insured can be up to a maximum of 20,000 euros, which I think is really good because that's over 2 million, right? I'm doing masters in mathematics, but I can't be able to even convert the euros to Kenya shillings. Yeah, it's around there, something like that. And then, yeah, the most common is lump sum payment. So, yeah, which of course we've said is used to cover for your funeral expenses. Yeah, so please, this one, anyone who doesn't have a life insurance, please just take this one. And especially because I've also seen sorry to say this, but we have lost some of our friends here in Germany. I'm thinking you've all seen that. So yeah, and we see like tunachanga and stuff like that. So of course kuchanga sio mbaya, but also knowing that someone had this cover, at least it relieves even your people back at home. Wanajua everything is catered for. Yes.
Back to me, thank you, Charity. And we've got factors affecting the premiums of life insurance. The first one is insured amount. The more the insured amount, the more the premium you pay. It makes sense because like if you have an insured amount of 50,000, it is cheaper in comparison to like if you have an insured insured amount of 500,000. That we have the constant sum insured versus decreasing sum insured, we talked about that before, and I said the premium of the decreasing sum insured is a little bit lower than the premium of constant sum insured. Then the next one is the length, the duration of insurance policy. The longer the insurance policy is, the higher premium you pay. Why? It's because maybe I take a contract at age 30, then I would say, okay, I will pre-select, I will predetermine that the length of my insurance cover should be 60 years, or let's say first 30 years, so, or 20 years. So by then I'll be 50. There is a lower chances that I will die within this duration of time than when I take a coverage of 60 years, by then I'll be 90. So, and that's why the premiums are higher when you take a long period of time. Exactly. The factors are?
Factors, yeah. The age, of course, if you're younger, it's cheaper because if I'm 30 years and I have someone else taking the premium, the cover when they are 20 years, of course, theirs will be cheaper because the insurance company knows that I have higher chances of dying than the person who is 25 years. And then occupation. So some occupations which are, for example, I would say high risk occupations. I don't even have an example unless if James you have an example, like people who build or something like that. You know, I think you get when I say like those high risk occupations. So if they see that there is a high, as compared to, for example, a teacher. So if for example you compare that, then there's a higher chances of someone else who's building or something to die than a teacher. That's what we assume as an insurance company. And also doing extreme hobbies like motorbikes or those extreme hobbies people do. Smokers, their premiums of course are higher because we assume that their chances of dying is higher. They are high risk people. So if you smoke, you're probably going to pay a higher premium than a person who doesn't smoke. And the health of a person and also being overweight. So health and lifestyle of a person. So if you're overweight and there are chances that you're going to pay a higher premium because we assume that being overweight comes with things like diabetes or high blood pressure, which might lead to which are high risk according to the insurance company. So that's why. And I would say that all this, when you're taking a life insurance, when you're given the form to fill, you are supposed to fill all these, like for example, they ask you occupation, so you write your occupation. So please do not lie, because for example, you say you do not smoke, and then years later you die because of lung cancer, which probably one of the causes is normally smoking. Then just know that your beneficiaries will not be paid anything. So it would have been a waste of money.
Yes.
Can I interrupt? Can you go back to the slide 19? Yeah, okay. I just want to see the premiums and the age. So the less time, the lower the premiums, eh?
So this is the length, the duration, the duration of the insurance, of the coverage. Like maybe before you sign a contract, they will ask you how long do you want your insurance to go. You can say 10 years, 20 years, 30 years, 40 years, 50 years. And the longer the period, the higher the premium.
Okay, all right, thank you.
Yes, and just to we will get to question and answers later, but just to emphasize on these factors, I think I have an online calculator. All this the values here are actually from the online calculator. It's not just from my own thinking, but I can show you the factors. I hope I can. Let me very quick. Sorry about that. I think where is that now? Oh yeah, okay, here. Okay. So as we said, there is the constant in sum insured and the falling. So if we pick the constant sum insured and then we go, then there was, if you are insuring yourself, you are the policy holder at the same time, but you can as well, if you can remember, there was that cross. At the same time, I can take this option to insure someone else, and when this person dies, then I will be the beneficiary. But let me just click on this option, and then of course you can choose the and then the sum insured. The minimum in this case, this is ergo. The minimum in this case is 50,000 and the maximum is 500,000. And let's choose 200 maybe, or even 150 is okay. And then how long? Is okay. 1 year is the minimum in this case, and the maximum is 56 years. But let's take optimal one, 30 years. And of course, the occupation. And the case of smoking. If you are smoking, please say yes. And if not, just click no. And then there is like here, was it like if you have not smoked for the last 10 years? And then man, you have to give your motorbike. And then you have to choose the time when your insurance cover will begin. Then you have like 13 for the comfort one, and premium one, you have like 13 euro per month. And that at the end, in this period of 30 years, in the case of death, my beneficiary will get the sum insured, which was 150, I guess. Okay, that's all. Let me go back to the PowerPoint. Can you see my PowerPoint presentation now?
Yes, we can see it.
Okay. The obligation, I think, Charity, can you take us through that again?
Okay, so here we are looking at what is a policyholder supposed to do. So first of all, you're supposed to pay the premiums on time. So you may ask yourself, what happens when, for example, I'm paying my premiums and then I'm unable to pay, like suddenly I'm unable to pay. So what we saw is that it depends on the type of insurance that you've taken. For a term life, which is common in Germany, if you stop paying your premiums, they are going to send you a reminder. And if you don't pay at all, your policy is going to lapse. Lapse means that everything is gone, like whatever premiums you had paid, that's all. Like you'll not be paid anything. In the event of death, that your beneficiaries will not be paid anything. So it's always good to at least make the premium payments, because if you don't, then your policy is will lapse. That's what we call it. And then also you should answer once you get, like James has taken us through how you apply for a life insurance. So they normally ask you some medical questions. For example, what's your weight? What's your age? What is, like, do you smoke regularly? Do you drink? Like, do you have a history of maybe a disease, for example, cancer or something like that? So please make sure you answer that truthfully, because like I said, in case you die and then they'll go back to your policy document. This is what we call it, like not policy document, this document that you fill, and then they check, did this person say they had history of, their family had history of cancer or something, or diabetes? Did he say that he was diabetic? And then they see that this person died because of diabetes, then unfortunately your beneficiary is not be paid anything. So you should answer as truthfully as possible. And then also obligations for the policyholder. You will find, when you take a life insurance cover, you'll be given a policy document. Please make sure you read it thoroughly, because insurance companies have this they normally write some small clauses somewhere. They are hidden somewhere, and then when you die or when something happens to you, then you see that your beneficiaries are not paid. Why? Because they'll tell you, but here we had written this and this and this applies. So that's why you mostly hear most Kenyans will always say that insurance companies are a scam, because there's some clause, or the agent who was taking you through buying this insurance policy didn't tell you that if this happens, remember, this is, these are the consequences, or just look at your policy. So just go through your policy document vizuri kabisa, so that in the event of anything, your beneficiaries are always informed. James, I think that's the last slide.
Yeah. The insurance companies that offer life insurance in Germany are listed here. These are just top 10, I can say, but there are a lot out there.
Yeah.
So I think we are done at this point for questions. I think it can be, the door is open.
Wow, thank you so much for the very impactful session, Charity and James. I'm sure this is actually very, very important now that we've had scenarios where, we had to support people back home. It's something we have to embrace. At least we have the financial support, and we hope that by the time we are signing up for the insurances, we've seen those small details. So I'll stop recording so that at least we can open the questions. We can have free time to ask the questions, and then